watching Talking Point. I'm Tamanna Inamdar. Today we have a very special show, and we're starting off with a conversation with Manav Chopra, Director Technical Analyst, Nuvama Institutional Equities. Now, we're very excited to speak to Manav, and I think it's great timing, Manav, because of a call you made in June this year on IT companies. So today you have bragging rights. You get to say, I told you so. I can see that with your smile. And then let's just look at what's happened in the last couple of sessions. So now we knew that the next big trigger is going to come with the Q1 results season. You've had two off the bat already, TCS and HCL Tech, and both received very, very positively by the market. This in line largely with what you had seen back in June, and let's just pull that up on the wall as well about what Nuvama had seen and when they had initiated buy calls. This is in June of 2024, the kind of returns they were seeing on an Infosys, Tech Mahindra, Persistent and Info Edge. Not quite on a TCS and HCL Tech, but this is a tide that has lifted all boats. So Manav, let's begin with your opening comments on this.
So if we go back like a month, like a few weeks back, IT was one of the most unfavored sectors. Mainly, it has been a major underperformer, and that's where we witnessed that largely IT has been on a larger uptrend. Our long-term model that we run, usually which indicates an early trend mover advantage that we got, and basis on that, we looked into the broader formations where IT has been massively underowned, and one of the large cap sectors which is massively underowned and is basing out and then showing some structural changes. When actually things starts to play out in favor of any fundamental confirmation, the index has already sees a good run up, and I think that's exactly what has played out at the moment. But talking about the present and what we look going forward, I think we've seen a very, very strong run up coming into this space. But one thing we shouldn't forget, that majority of the mutual funds, to our last study, indicates that majority of them are still underweight. So a frontline sector which is majority still underweight, and the kind of results or the previews that we are getting, and any shift in terms of the guidance or the parameters, once the mutual fund starts to chase the frontline space, I think that leaves to another strong leg up coming in. And the kind of a run up that we've seen recently, the way the IT index has breached its Feb highs with a lot of stocks showing strong cash-led buying, I think there is a reasonable room still on the upside, and we still foresee IT index going towards the 42-45,000. And the coming 3 to 6 months should be very good for the IT index in general.
Okay, so this obviously you're seeing this on the charts, and we've got those stocks on our screen of the ones that you had shown enthusiasm in way back in June. You saw a 12% upside on an Infosys, a Tech Mahindra, Persistent and an Info Edge. Not quite an HCL Tech and a TCS. Since HCL Tech is the flavor of the day, Manav, let's get your take specifically on this counter. I mean, fundamentally, the numbers are, one would say, in line, slightly better than expected on Q1. Even the management seemed positively surprised. Not sure if there's enough to warrant this kind of a run-up fundamentally, but are you seeing sort of a bullish pattern continuing for HCL Tech?
See, generally, most of the IT names are witnessing, names like HCL Techs or even Wipro for that matter, or even Tech Mahindra, they are witnessing good amount of short covering rally. They were massively, shorted kind of names relative to other names, and the kind of a run up that we've seen recently with very, very strong volume setup, I think HCL Tech definitely seems to be likely heading towards its recent important levels of 1700, 1750. We don't take away from that, because in generally IT as a space looks good. So there will be a catch up rally coming from the laggards as in general. But in my pecking order, I strongly feel, the stocks which could see sustainable new highs coming in. In that space, I think definitely Infosys and TechM remains my top bet. But other names like HCL Technologies or Wipro for that matter, will, which have been the laggard in last 6-12 months, would actually see some bit of a catch up also coming going forward. So with the IT index, which has a reasonable room of 10-15% from here, these stocks can anywhere rally another 10-15%, maybe an out range of 20% very much there. So we are generally still very bullish, but for a near-term momentary trade, yes, HCL and Wipro does has some 15% more run up from here too.
Okay. What about a TCS? I know you've maintained Infosys as one of your top bets, but what about a TCS? We've already seen a phenomenal run-up, some would say a really surprising run-up. First of all, was that anticipated, Manav? And do you see that sustaining?
Very good thought. As in, generally when we are looking into the large cap structure, TCS eventually, has seen that strong move and breakout coming in. I think the price prior to the result, was witnessing series of selling pressure, and there was some liquidation which has happened in this frontline name. So I think, and along with the short covering that has got TCS moving, I think there is going to be some more fuel going forward, particularly in the names which are reasonably under-owned and which has performed in recent times. So I will definitely would want to have TCS as one of the frontline names which could definitely propel it going higher. Will not be surprised to see if we see TCS over the period of time close to 46,000-47,000 levels. And with the force coming back, with the FIs also turning bullish, I think the frontline names would be chased. And within the IT space, so obviously the frontline, the most liquid ones would be Infosys, TCS. But the way the TCS have given up some clarity and the monthly breakout on the charts, I think we will not take it away that the TCS also has a good amount of room towards 4,600 levels. So that should be the targets at least from 3 to 6 months from now.
Okay, so TCS, continues its upside. Manav, I'm going to take a little more time from you on IT because, frankly, that's the biggest talking point, and consistently, even when IT was underperformed, unloved, one segment among it which did fairly well relatively was the mid-cap IT space. Now, in this, of course, Persistent is on your list, not so much as Coforge. Let's talk a bit about Coforge and, what you see happening there.
Right. So Coforge in general, the only thing was that in the previous decline, the Coforge retraced a little more than a 50% of its advance. So, usually when that happens, the stock usually takes a good amount of time to base out and bottom out. And lately, we have seen a good catch up coming in within the mid cap space in general. We've seen a lot of mid caps actually go to new highs at an early stage, but that was not the case with Coforge because it has largely been one of the laggards and has multiple resistance. But I think at the near-term perspective, the stock, after it breaching its 5850 resistance levels and the way the stock has sustained above it, consolidated and resumed its uptrend, I think definitely one of the laggards within the mid caps will see some bit of run up going towards. I will not be surprised to see how the structure is played out and a beautiful trend line breakout that has been witnessed in Coforge, a rally towards 6,200, 6,400 to sub 6,500. Very much likely. I think the previous rally where it halted, that's where we might see the immediate extension towards, and then we will review it from there whether we see much more upside coming in on. But one of the laggards that you clearly highlighted, HCL Tech, TCS, Coforge, I think there is a reasonable room still left in these names going forward.
Okay, so reasonable names in this space going forward. But let's move ahead from just IT, Manav. We are in a very, very exciting week, and we're speaking at the perfect time, I would say. Run up to the budget, indices at all-time highs. Breaching all imagination. Where do you see, let's say, the Nifty sustaining? Let's look at how you're looking at the Nifty outlook going forward. And are you seeing a sharp run-up for the budget? Do you see a correction around the corner? Because that's the other fear.
So when I'm looking the Nifty construct over the medium-term perspective, and the kind of market breadth that we have seen in the large cap names after the election results, I don't foresee any big corrections or profit taking coming, at least in the frontline segment. My sense is that the Nifty is headed towards sub 25,000, 25,500. This is very much likely over the period of next 2 to 3 weeks. And mainly this rally, like we anticipated, would be participated by the IT, followed by Reliance, which is also well positioned, Larsen, select FMCG names, pharma, and the power utility. So in general, this entire space and the frontline segment is looking so well positioned with broader breadth. I don't see any weakness or exhaustion patterns which hints for any correction. So largely, I think the frontline space is very well positioned for much more room on the upside without any correction or any opportunity for a major dip. But there is a possibility where there is a sectoral rotation happening and the mid caps are slightly, you might see some bit of an exhaustion or profit booking coming in because, they have already seen a reasonable extended rally in the mid caps, small caps. Many few pockets of sectors within the mid caps have already gained more than 30 to 50% in last few weeks. So I think the defensive structure of the markets heading towards the results and with the broader breadth improvement, the frontline names are the most preferred spaces to be in. And in that case, I think with the support of the IT and other sectorial analysis, I think 25,500 is what we will be looking in next couple of months for the markets.
25,500 on the Nifty. Do you want to give us your outlook on the Bank Nifty as well, Manav?
Yeah, so Bank Nifty, has witnessed a very strong rally, obviously with the MSCI angle that played into the HDFC. But going forward, I think now this sector is getting into some bit of a time pause correction, I think, which is very healthy signal for the markets in general. And we've seen, such classical example happen on the sectoral over a period of time. So for the near-term perspective, I think Bank Nifty should see some bit of a more time price consolidation where it might move around the levels of 51, 52,000 on the lower side. And the upside seems to be near-term cap towards 54,000. So this is a zone where Bank Nifty might consolidate, will start to regain. And as in when the Nifty starts to break beyond 25,000 levels, I think that would start triggering some upside for the banks going forward. So I think it's just a matter of time where the banks will also resume. We have seen enough time pause correction also happen in the PSU banks, which is in general very healthy. My sense is going forward, Axis, ICICI and SBI should take the lead for the Bank Nifty, and a likely scenario where SBI should be heading towards sub 1100 to 1200 levels. I think a reasonable amount of an upside is still pending in SBI, and we've seen very strong base setup in SBI over the period of few weeks, which is very encouraging. So in general, we are still positive on banks, but my still sense is that, IT is the most preferred sector to be in, but the current structure of banks would start seeing some positive momentum above 53,500 closing.
Right. Manav, just before I let you go, another call that has turned out perfect is on Tyre stocks. JK Tyre, Apollo, all of them running today. Can you just take us through quickly your rationale for why you were bullish on them? And of course, we've had fundamental reasons, news reports of Tyre hikes, which have seen those stocks showing momentum.
Sure. So Tyre as a space, within the autos, auto as a sector has been very good, has witnessed a very good bull rally since October 23. And there has been certain pockets within the subsector of autos which have seen some bit of a correction. And Tyre as a sector has, formed a very, very strong base formation over the past few weeks. We have witnessed very strong accumulation pattern happen post the decline of 10-15% in individual name. My pecking order is Apollo Tyres and SEAT. And we expect new highs coming into this stock when we are also looking at the international rubber prices. My sense is the international rubber prices are also on verge of peaking out. Also, crude has come to a point where, you will see some bit of a resistance and cool off coming in next few months, which could act as a reasonable tailwind for tire names in general, and recently a short-term breakout in tires with volumes. I think all these confluence together indicates a very strong run-up rally, which is likely to play out. And in that case, we've given an upside target of 3,700 in CIT, which is still 30% from current levels. And for Apollo tires, my target stands at 720, which is like a 35% from current levels. So we see a reasonable room coming to these names, backed by very strong, larger uptrend, which is still intact.
All right. Okay. So Tyre is also having a great day. Thank you, Manav, for speaking with us. Manav
Thank you.
Chopra of Nuvama Institutional there on two calls that went perfectly right, IT and tires.